What if I told you a railroad stock just soared over 21%, and it's not Union Pacific or CSX? It's Greenbrier Companies, and it might be one of the most underrated players in the U.S. industrial comeback story. Why is this company suddenly on everyone's radar? Because as supply chains shift and shipping costs rise, rail freight is quietly making a huge comeback, and Greenbrier is riding that wave hard. Founded in 1981 and based in Oregon, Greenbrier designs, builds, and services freight railcars across North America, Europe, and Brazil. They're not just a manufacturer, they also lease, manage, and repair rail assets, making them one of the most vertically integrated players in the sector. In the last quarter, the company posted solid results, surprising analysts with stronger than expected revenue and earnings. And that's what triggered this recent 21% stock jump. Let's break down the numbers. Greenbrier's price-to-earnings ratio sits around 7.1, very low compared to peers. Return on equity is a healthy 16%, and the company is cash flow positive with a growing backlog of orders. Their market cap is just under $2 billion, putting them in a sweet spot for mid-cap growth potential. This isn't a hype stock, it's a value pick that's quietly delivering results. From a technical standpoint, the stock just broke out above its 200-day moving average with a major spike in trading volume. Momentum is building, with RSI moving into bullish territory but still below overbought levels. Short interest has dropped, and institutional buying has picked up. In other words, the chart is looking strong. Now let's zoom out. Rising oil prices, port congestion, and the push for domestic manufacturing are all boosting demand for freight alternatives, especially rail. Greenbrier is positioned perfectly to capitalize on this trend, with flexible production, long-term clients, and a growing international footprint. While electric vehicles and AI dominate headlines, essential industries like freight infrastructure are starting to shine. So, what's the story here? Greenbrier may not be flashy, but it's reliable, profitable, and benefiting from macro tailwinds that are just getting started. This recent rally could be the beginning of a longer-term trend, especially if earnings keep surprising to the upside. Still, after a 60% year-to-date run, some investors may want to wait for a pullback. But long-term, this stock could be a powerful compounder. Of course, investing comes with risk. Market volatility, interest rate shifts, and demand cycles can all impact performance, so always do your own research. This video is for informational purposes only, not financial advice. If you found this breakdown helpful, hit like and subscribe for more deep dives into high-potential global stocks, every week, in under 5 minutes. Thanks for watching, and I'll see you in the next video.